What's up, everybody? It's your boy MIA back with another installment of 5 Things to Know This Week in the Market. But as always, before we get started, just a quick reminder, we are live weekdays 9 a.m. to 4 p.m. covering all things market related. So be sure to like this video, subscribe to the channel, and hit that notification bell so you know each and every time we go live or bring you one of these time-sensitive videos. And now let's get right into it. First thing we'll be watching this week will be the ripple effects of SVB's collapse. Banking regulators shut down Silicon Valley Bank, or SVB, on Friday after the bank suffered a sudden, swift collapse, marking the second largest bank failure in U.S. history. Just 2 days prior, SVB signaled that it was facing a cash crunch, first trying to raise money by selling shares, then trying to sell itself. But all in all it did was stoke fear amongst investors, and ultimately it went under. It would appear, although hit hard by it, the banking sector will survive the SVB fallout. But what does this mean for big tech is the bigger question. FDIC only guarantees deposits up to $250K, so depending on the company, most of them, that money won't go very far. And it also does not just apply to cash deposits, but also companies using other SVB instruments like revolver loans or credit cards. So who this will affect most and what will be that effect are still widely unknown. But the crypto market, or the crypto world, I should say, will also be on high alert as the stablecoin USDC depegged from its dollar mark to under 87 cents after revealing $3.3 billion in SVB exposure. So we'll be monitoring this situation closely on a daily basis as new details begin to emerge. Next up, we have CPI data coming in hot. We'll get the latest reports on inflation in the U.S. next week with the Consumer Price Index for February due on Tuesday. Consumer prices, as tracked by the CPI, likely rose 0.4% last month, following a 0.5% gain in January. On an annual basis, prices are projected to have risen 6.2%, decelerating slightly from a rate of 6.4% in January. So this will be another data set to take into consideration as we set our eyes on next week's FOMC. Which brings us to the third thing we'll be keeping an eye on, which will be the PPI data. The Producer Price Index, tracking inflation from the standpoint of goods manufacturers and wholesalers, will follow on Wednesday. Producer prices are projected to have risen 0.3% last month, following a stronger than expected 0.7% gain in January. On an annual basis, they were likely up 5.7%, decelerating from a 6% even gain in January, and compared to a 40-year high of 11.7% hit in March of last year. So what do these numbers mean? With jobless claims coming in higher than expected last week, but then followed by a stronger than expected jobs report, mix that in with some Jerome Powell testimony, and it would seem a 50 basis points hike at the FOMC is back on the table. Okay, nothing's guaranteed. We've seen that number go as high as 70% likelihood. Then we watched it fall back down into the 30% likelihood. So the CPI and the PPI data are going to play big into what we see next week out of Jerome Powell and the Fed. Moving on, we'll be looking at retail sales figures for February. Retail sales, which are not adjusted for inflation, likely edged 0.2% higher last month after surging 3% in January. Despite a slowing economy, consumer spending has been resilient, but as savings deplete and inflation still runs wild, will this trend continue? And with the fragility of the market right now, any numbers coming in off projection could cause some movement in the market here. And lastly, we will be keeping an eye on the special stockholders meeting for AMC taking place at 11 a.m. on Tuesday, March 14th. With the vote on the conversion of APE shares back into AMC shares, as well as the proposed 10-for-1 reverse split set to take place. Now, the conversion itself, if passed, will not take effect immediately, as lawsuits filed against the movie theater chain claiming it violated state laws by creating preferred shares in an attempt to eviscerate the voting power of common stockholders who had not supported issuing the new shares. So that hearing is scheduled for April 27th. However, The voting results will have an immediate effect on the price action of AMC, APE, and most likely some other meme stocks like GME, BBBY, and others. So we will be keeping an eye on some meme madness, maybe getting back in the spotlight on Tuesday. And that is all for this week, guys. Everybody have a fantastic week, a happy St. Patrick's Day, and thank you again for watching. As always, tune in weekdays 9 a.m. to 4 p.m. Check us out, and we will check you out later.